Welcome back to the latest episode of Mortgage Matters, where I'm joined by...
I'm Michael Webb from Mortgage Republic.
And I'm Andrew Overman at Location. And today's question is I thought it was a really good question, actually, when I opened the mail this morning to address the show, because it's something that I've been curious of as well, Michael. Why do I need to put my buildings insurance on risk when I exchange contracts on a purchase if I don't own the property?
It's a really good question, and there's a really simple answer. When you exchange contracts, you're legally obliged to buy that property.
Okay.
So yep. You can't pull out of that contract without a financial loss. Now, it gets a bit complex in that, of course, the person selling you the property is legally obliged to sell it to you in the condition you're expecting to buy it in. Okay, so the reason that you're advised to put your buildings insurance on risk is between exchange and completion. Ideally, it would be insured by two people, the vendor and the buyer. But there's no guarantee that the vendor's actually got it insured, as we've discussed in previous episodes. Yeah, they may not have it insured. They may not have a mortgage on it. There may be no legal obligation to insure it. So that it's not insured. So you've got to buy it, irrelevant of a truck driving through the middle of it or a car crashing into the front of it the day before you're due to complete. So, and you will still be expected to complete on that, and then go through the modifications and all of that. So it's to reduce risk, basically. I mean, if we use that example, someone crashes a car through the front of the property, you've still got to buy it, and the property needs repairing. The best situation you can be in is that property is insured by you. It's also insured by the buyer or by the seller, the vendor. And therefore both insurance companies can work out who's going to fix it. And in the meantime, your insurance company is going to put you in a property to live, because especially if you're selling a property, you're going to need to honor the contract of sale and move out as well. So it's best to have it insured to negate some risk. It'd be interesting to see claim stats on between exchange and completion. I'm sure there are some horrendous things that have happened. It won't be that common for sure, because obviously usually there's only a week for something to occur, but typically a week or two. The only instance where we would be reluctant or unable to do that is if it's a new build.
So say about a new build, if you've got maybe a 9-month wait to
I mean, we don't do that. There's no point in, you can't insure something that isn't finished anyway. So, and why would you want to be paying 20, 30, 40, whatever pound a month to insure it whilst it's being constructed? That makes no logical sense. But if it is a resale property, it should be insured for that minimal, but that risk that is there. And I'm sure it has happened, and it's just best advice. And like I say, it's putting it on risk usually a week early. So that's the simple answer, really.
So then I'm assuming the status quo is the same if you're selling a property, because there may be a temptation to think, okay, well, I've sold this property, we've now exchanged contracts, I've got no legal obligation on it anymore, they have to buy it.
You should keep your policy until you've completed. Yeah, it should be double insured in that gap between exchange and completion.
And presumably that stems back to what we've spoken about in previous episodes, where your original mortgage offer, when you purchased or remortgaged the property or refinanced the property that you're currently in, you will have a contract or a condition of that mortgage offer.
If you're a seller and you've got a mortgage on the property you're selling, you need to keep it insured by legal obligation. Because if that car crashes into it and your buyer goes, well, I'm just going to pull out, I don't want a property that's had to be structurally fixed like that, I'll lose my 10%, I'll argue that in court, let my buildings insurance argue that with you. You've then got a 50 grand bill and no buyer, and you've got to, so you need to keep it insured.
That's brilliant. As always, Michael, it's a short episode this week, but we really appreciate your time and attention, and how comprehensively you can answer our viewers' questions. As always, if you like what you're watching, please hit like, subscribe, share this with anybody that you feel it would benefit, and we'll be back next week to answer more mortgage related questions to help you navigate that financing minefield. As always, I'm Andrew Overman, and
I'm Michael Webb,
and we'll be back next week. Thanks for watching.
Thank you.